Hi, Royce. In the first announcement of 2026, the Bank of Canada holding that benchmark rate at 2.25%. Let's talk about what stood out for you. The governor talking about a structural adjustment, a structural change. Is this the right call?
I think it was the right call to leave rates unchanged, but I think they did correct something that I thought was misguided in their communications late last year. In October, after the Bank of Canada cut rates the last time, they suggested to Canadians that they were basically done cutting rates. Now, for such an uncertain environment, an uncertain future that we face here in this country, I thought that was too much certainty. Today, it sounded like the Bank of Canada's Governing Council walked that back a little bit. They added some caveats around that statement. They talked a lot more about the uncertainty, which seems to have increased in their opinion since their last rate decision. They talked more about the downside risks to the economy, and they sounded a lot less worried about upside risks to inflation. So overall, I thought this was the right call to leave interest rates unchanged, also the right call to make some corrections to their communications.
The Bank of Canada mentioned that growth stalled in Q4 and in the latest monetary policy report revised GDP to the downside. Can you make the case why the central bank should cut rates in this economy?
I do think that there is a small but growing case for beginning to consider moving off of the sidelines and for the Bank of Canada to further ease monetary policy. You look at the most interest rate sensitive sectors of the economy. The housing market across most regions of this country is still ice cold. You look at consumer spending. It looks like it's pretty soft. And if anything, it could be softening as we head into the new year. I really think that, there is a case that the Bank of Canada can do a little bit more to step up its support of the economy. That being said, some of the indicators have been a bit more mixed, and I think it's probably prudent for them to wait a little longer. But, if there is a shock, a negative shock to the economy, even if it's not huge, I think it's worth, the Governing Council considering seriously easing monetary policy further to help the economy get through this year, because this is going to be a tough year. We know the CUSMA renegotiations are going to be volatile. Population growth is basically going to be zero this year, and a lot of households are going to face pretty stiff mortgage renewal resets at higher interest rates. And so, maybe there is a case for the Bank of Canada to ease a little bit further. I don't think it's, we're there yet, but I don't think we're very far off either.
Let's pick up on that, on the trade aspect of it, and the governor talking about trade diversification, developing new markets, and maybe let's bring into this conversation what is happening with the Canadian dollar. It's more expensive. We know that our exports are around 60 to 75% to the US. Forgive me, you will know this better than I will. And perhaps if you can also include the US dollar weakness, all of these elements playing into trade, and as you had mentioned, this being a big year with all of those variables.
So the broad-based weakness in the US dollar, as you mentioned, is affecting the Canadian dollar as well. The Canadian dollar has appreciated in recent days, and that's going to make it tougher for our exporters. Our exporters are out there trying to find new markets to export to diversify their sales. But at the same time, this stronger Canadian dollar is not helping. That, I think, adds marginally to the case for further easing from the Bank of Canada. We look at how much we send to the U.S. We've gone in a short period of time from being very exposed to the U.S. to a little bit less exposed, actually. With the TMX pipeline coming online last year, we're now sending more and more energy shipments out to Asia. Some of that in a very roundabout route is going to Europe. I think there's some optimistic prospects there, but we still send a lot to the U.S., and CUSMA is the key to this trade. Of course, we know that the Prime Minister likes to say that Canada has the best or one of the best trade deals with the U.S. It's all about the CUSMA exemption. And if we lose that, we're going to have some serious problems. Right now, I'm hopeful that we can retain that even if the negotiations get pretty volatile. But, only time will tell. And, at this point, it's very hard to forecast where trade will be at the end of the year. And therefore, it's very hard to forecast where the economy will be at the end of this year as we get through these negotiations.
Housing, a big component of our economy. There was a question or two in there at the press conference with the Bank of Canada announcement, talking about the downturn in housing, and how much do you think this is on the radar of the central bank, given that a lot of mortgages are up for renewal this year?
It's got to be on their radar at this point, because the stagnation or weakness in the national housing market across most regions is just been there for so long. And we're not seeing house price gains at all, basically, across most regions. Continue to see small house price declines. This is partly attributable to the slowdown in population growth. It's partly attributable to the mortgage renewals. And those things are going to be important factors again this year and aren't going to abate. So if the Bank of Canada really wants to see a rebound in the housing market, they might need to step up their help. Now, that being said, we look ahead to 2027, and actually population growth looks better. The mortgage renewal resets turn from a headwind for the economy to actually a tailwind to the economy, because people who are renewing in 2027 will probably, assuming interest rates don't change all that much between now and then, will probably be renewing at lower rates. And so there is some light at the end of the tunnel. It's just in the near term, we do face some downside risks here, and that's got to be something the Bank of Canada is concerned about.
Royce, just lastly, the forecast for Desjardins, your base forecast?
We're very much in line with where the Bank of Canada is now. The Bank of Canada downgraded their GDP growth projection to about 1.1%. I think that is very consistent with what we expect. And they downgraded their inflation forecast to 1.9% for the end of this year. And, we're right at about 2% as well. I think those forecasts reflect the reality that the Canadian economy is going to remain weak this year. But there is some optimism on the horizon, assuming that we can navigate all of this uncertainty this year. And that is a huge assumption. So I don't want to put, too much stock in these point forecasts this early in the year. But I will say, if we're able to navigate these things, there are some good things to come for the Canadian economy in 2027.